Shireen, a very good morning to you. As I'm saying and looking at some of the shares that are trading on the market today, as I said, we're seeing the banks coming back a little bit, and we've also seen that rand strengthening today, adding on to those gains that we saw yesterday. But most commentators are suggesting that what we're seeing here is a relief rally. From here on, the rand will weaken.
Yes. Well, we did see that the rand regained some of that strength on the back of the risky assets rally yesterday, brought about by an improved sentiment and optimism surrounding the global growth outlook and the Eurozone debt crisis as well, has waxed and waned quite markedly over the past couple of days. And yesterday was no exception. We did see record holiday retail sales coming out of the United States, as well as the Eurozone leaders possibly announcing that they would add additional stimulus measures to tackle the debt crisis. But we do believe that the debt crisis is of a structural nature and that a very bold solution is necessary in order to end that crisis, and we don't really see that being imminent. Having said that, we do believe that the risky asset rally rather will likely to be temporary. Nonetheless, risk seems to be on this morning, and that could imply that we could see further rand strength coming through today. So we're really looking at a trading range of about 820 to possibly 845.
And we're sitting at...
If we do see GDP data...
Go on.
Sorry, if we do see GDP data surprise on the downside, we could see further weakness come through.
Yeah, so we're looking at 832 at the moment against the dollar. Now we had the credit numbers that came through, the headline number slightly below what the market was expecting. Was that what you guys expected as well? How far out were you?
We had expected an increase to about 5.6%, but it wasn't too far off expectations of 5.7%. However, the numbers came through slightly lower to 5.5% from a revised 5.4% in September. So the general consensus is really that credit take-up is not really very robust at the moment, and that there's no real spark in the market for further take-up. We did see mortgage advances as well as installment sales other loans and advances also continue on the downward trend. So we're not really going to see a very robust move towards the end of the year.
Yeah, so let's look at that GDP number that's coming out later. Some are suggesting that perhaps would be the biggest influence on the rand for the rest of the day. What would move the rand in your book?
If we do see downside pressure coming, if we do see the number coming lower than market expectations of 1.8% and possibly further than our 1.6% that we have penciled in quarter on quarter, we could see some weakness come through quite a bit. We did see GDP growth ease quite considerably in the second quarter to 1.3% from 4.5% in the first quarter. So if we do see further downside pressure on those numbers coming through from the mining and manufacturing as well as the agricultural sectors, we could see further loss of momentum.
Right. What about this suggestion that we saw yesterday coming out of the Organization for Economic Cooperation, that's OECD? They are suggesting that South Africa has room to cut interest rates from here on. Standard Bank is the biggest bank in Africa and in South Africa. Where do you stand?
Well, those comments are quite plausible, and we do see that the economic environment is pretty okay at the moment for further stimulus. But the SARB has indicated at the last MPC meeting that they are very concerned about inflation, that it's likely to remain outside the target band for a protracted period, and not just looking at temporary measures as like the further rand depreciation that could cause that inflation number to spike further. They are very concerned about growth as well, but because of the concerns about inflation and where it's likely to be by the end of next year, they have alluded to keeping rates pretty much unchanged, and it's the basis for our rate view of keeping interest rates at least steady for the next 12 months.
Yeah, the interesting point for me is that the OECD is suggesting that the Reserve Bank should look through the inflation spike. In other words, ignore that one, but you're suggesting that perhaps the Reserve Bank doesn't see things quite that way. But what about then the long-term outlook for the rand? The various reports that I've been looking at are suggesting that we're likely to see a weaker euro going forward because of all the issues around Europe, which by implication, because of Europe's strategic importance in terms of trade with South Africa, suggests that we should see a weaker rand going forward.
Indeed, I'm spot on with those sentiments as well. We do expect the rand to continue weakening, albeit not as stark as we have seen in the past couple of years when we saw the rand decline quite considerably we do expect that GDP growth is expected to come off slightly, and we have seen the OECD, the National Treasury, the Reserve Bank, as well as Standard Bank, all revising our GDP forecast lower, and that's expected to keep the rand quite weak for some time.